Well, happy Monday to you. Thank you for joining us here on the Market Day Report. I'm Marlon Bowling with you, and we're going to get ready to open up our daytime trading session here on a Monday. It's going to be a full trading week, and here to talk about it, we have Rich Nelson on the line, and he, of course, is with Allendale Incorporated in McHenry, Illinois. Hey, Rich, thanks for joining us here today. How's things around where you are here today?
You know, actually, I got a great day for us for once in a while. We've had 2 or 3 weeks of nothing but gray skies. Today we have some sun, blue skies, so actually a great day for us here in northern Illinois here.
Everybody is starting to think about spring, huh?
It definitely is. Going to remind people that winter is about done and good times are up ahead here.
All right. Now, of course, we have heard a lot of stories over the weekend about heavy rain, flooding in the Ohio River Valley, some other areas as well. Southern Michigan has had flooding to deal with. We wondered how much that would cause disruptions here in the cash grain movement around the Midwest here.
And that's definitely a big question here for us right now, especially as producers were looking at maybe moving some beans here at these high prices. So definitely a lot of discussions about this potential movements on basis. But as it stands, I don't know if we're going to get that big of a push here in prices here. So we'll see about that if by the end of this week here, though.
All right, USDA just moments ago said we had a couple overnight sales. I thought we could take a look at those numbers here. We had a sale of corn and we had a sale of soybeans. The soybean sale, 132,000 tons. It went to China, and that was for the current marketing year. Now on the corn side, we had 125,000 tons, and that went to the proverbial unknown destinations also for the current marketing year. Do you think that'll give the market any boost at all today?
I don't know if it'll actually give us any extra pricing, but I think it'll definitely support us at some lower attempts. So bottom line with us for right now, Argentina is still dry, still a driving force for this market. And as far as corn, these great export sales may be giving us a slight piece of good news to add secondary support here.
Overnight, everything was higher. We can take a look at our prices on the board on the Globex trade. And on the corn, we were up about a penny and a half. We had the March contract at 367 3/4. We had July 1 3/4 higher overnight at 384. Even new crop December was up a penny and a half at 398 3/4. It got as high as 399, still up within a stone's throw of $4 there. Soybean trade overnight had traded significantly firmer. We have March soybeans 7 1/4 higher at 1043 1/2, and July up 7 1/2 cents overnight. Meanwhile, in the wheat trade, we had some strength there as well. We had Chicago March up 5 at 457 1/4. In the Kansas City market, we had the March contract trading 5 3/4 higher at 474 3/4. And in Minneapolis wheat, the spring wheat on the March was 3 higher at 603 3/4. And to round things out, I wanted to check on the cotton market. Of course, a lot of attention rolling out of the March contract these days. The May was up 3 points at 81.37 overnight. December new crop was up 13 at 76.73. Back to the soybeans and the wheat here. Rich, what, in your opinion, was spiking those markets higher in the early going today?
You know, I think the main issue certainly on the soybean discussion is this Argentina weather. We do have some rain lined up over the next 7 days, so a little short-term precip could give us something to talk about here these next few days. In the grand scheme of things, though, next week is still going to be net drying here for the most part. So new highs, new contract highs for the beans based on this dryness. As far as corn and wheat, looks like they're just going to play follow-up right now here.
And in talking with my colleague, John Jenkinson, this morning, back in southwest Kansas, only a sprinkle over the weekend. That's not going to help that wheat much.
Probably not here. I think a lot of people probably want to see a little more before they actually suggest that things are really corrected down there.
All right. So do you see much more upside potential this week in the wheat market?
You know, for this week, maybe not here. I think this overall weather system of the past few days is going to get the trade's attention here and maybe give us a little lag. But certainly as we look for the next few weeks, I think as we get into this important yield determination for winter wheat, which are late March and April's rains, I think this will be a very big deal, which could give us a next boost up in prices later on.
Okay, Rich, we'll talk a little livestock when we come back in a moment. Our guest is Rich Nelson of Allendale. Don't go anywhere. We'll be right back. Well, thanks again for joining us here as we kick off a new trading week. I'm Marlon Bowling. I'm joined by Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're going to talk about what to expect in our livestock trade today. And I guess the big question this morning here, Rich, is is the market going to react to the cattle on feed numbers that came out Friday afternoon after the close? We have those numbers for everyone, and in case you missed it, when the report came out at 2 p.m. Central Time on Friday, we had the on-feed number at 108%. That was pretty close to the average trade guess. Placements, though, once again, yet again, higher than the average trade guess, came in at 104% of a year ago. Trade was looking for something closer to 101. Marketing's 106% was almost right on the money with what they expected. So what do you read into that there, Rich?
I would suggest we'll have maybe a little lower trade as far as the starting points for this morning's discussion. Keep in mind, this January placement number was the largest in about 12 years. It was not obviously much over the average trade guess, but certainly was a little bearish. And it does add a little more pressure to this late summer, early fall time frame when these placements would be hitting. So I do think it gives us a slight amount of pressure here for today's trade. Nothing that's going to give us a major price decline, though.
Well, when you look at the delayed weekly export sales that came out last week on the beef and the pork, boy, that beef number was extremely low with what we have been used to seeing. Is that something that really weighed on the market late last week?
I think it did add some pressure here. So this is now 2 weeks in a row where beef exports were troublesome after what's been a fantastic January and most of February here. So regarding these last couple of weeks, maybe we're going to have some problems here as far as these next few weeks, and that could act as a lag for us because keep in mind we have a seasonal rise in supply lined up these next few weeks. So lower prices could be seen. On top of that, we have this export discussion here, too.
What about the pork? That was extremely high at 40,400 tons.
And
a marketing
that's
year high, too, I should add.
Great point. These are great pork exports and helping to reverse what's been kind of a slow pace in January. So hopefully we're changing the story on the pork. Haven't seen it yet carry over on the cash hog prices yet.
All right, so cash cattle trade late Friday afternoon on the livestock summary. We didn't sell very many, but the ones that did sell were basically steady with what we had the day before. Not a lot of movement there. If we look at the beef cutout values from Friday afternoon on USDA's update, they were kind of mixed. Choice cuts were down 3 cents. We had select cuts up 76 cents. Meanwhile, if you look at the cash hog trade, USDA said that Friday afternoon the plant-delivered hogs were all lower across the board, carcass basis and live basis hogs. And if you look at the pork carcass cutout values, the product values Friday afternoon were actually mainly higher. So kind of a mixed influence, I guess, from that angle.
Certainly right. I think this will be something we have to point out, especially in these next few weeks, this difference between wholesale prices, which are holding relatively well compared with the cash end. So hopefully this will change here, maybe on the cash hogs, maybe this week, and on the cash cattle. I don't know if this will get straightened out here just too much yet here.
Okay, so now one thing that I've been asking analysts about here the past couple of days is how do you tie in or how do you reconcile the expected moves in the corn market as we get closer to planting time with potential moves in the livestock side? Do you think there's a fear that maybe the feed input costs are going to be increasing for the livestock?
You know, there could be, and it's a very valid discussion point, and especially for us when we're watching this feeder cattle market, which is been very interesting in these past few weeks. I think this is a very valid discussion. For ourselves, we're suggesting that this feeder market really can't push past maybe 153, 154, because that gives you these oddly strong break-evens for second half of this year, 120 on up. And you'll notice these futures are nowhere near those prices. So on the feeder cattle side, we'd have some good arguments, and I don't know if this is going to be a nice picture here in a few months here.
All right, Rich, thank you for an early look at the markets here on a Monday as we get ready to rock and roll on the daytime session. Appreciate it very much. Rich Nelson is with Allendale Incorporated in McHenry, Illinois, where it's starting to look a little more like spring, he says.
Oh, that's nice to hear.
He's in a better mood.
Thank you very much, Marlon.